Good day, everyone. My name is Dan. This is an entry that we want to put together. Today is January the 10th, 2025. It's a little bit after the 10:20 turn in the morning. And this is an entry that we wanted to put together for new subscribers. So we're going to link it in the daily note and maybe a few other posts of what can you expect with the premium service of GTC traders. So if you scroll down, you'll see there's a premium service, right? This is daily content and allowing ones over the shoulder, which will take you here. So you've probably already gone through this process. We have a 7-day free trial, and it's read the report. So you read the report. You can see basically all the posts we put up there. It's only $15, and I can tell you right now is we're going to show you the GTC sample portfolio on the income account. It's already way past that, right? In addition to, I forget how many thousands we made last year, beyond just the capital additions. I know with capital additions it was something like $6,000 or something like that on what is a very small portfolio, right? And by the way, I would add a portfolio that we can't fake. That's critical. I've been doing this for nearly 30 years, and the number of AI bot, I've got a system, bro. Let me show you my Lamborghini and my mansion. It's ridiculous. Sorry if you hear my wife. My wife just obviously stopped driving somewhere. Sorry if you hear the phone go off. Regardless, it's ridiculous. Partners and I will just pass those back and forth as a joke. You know, the kid. It's very obvious the kid's never worked a desk a day in his life. He may have had some success with trading with all of his 3 years doing it, and never been near a desk, much less interned at a desk. But he's going to teach other people how to trade because he's got a system, bro. And he wants to talk about all of the things that have nothing to do with trading, which we don't do here. Just the other day, we passed one back and forth, and it's like the guy wants to show you his trading setup, bro. So he goes into this place, and there's a hypercar right in the middle of what is supposed to be a trading floor. It's like, are you kidding? Do you think any serious trade desk that you would go to work for has something like that? Matter of fact, some of those cars, we call them douchebag mobiles because it's like they're fine automobiles. They're excellent. I love cars and they're excellent. But it's like only D-bags buy them. So it's like we've often talked amongst ourselves. It's like, if I was one of those brands, I'd start suing people. I'd do it like Rolex does it. Before we sell you this vehicle, we got to get to know you because are you a D-bag or not? Right? If you're a D-bag, we're not going to sell you this vehicle. But anyways, so he's going through, and these are my setups, and here's my 5 monitor setup, and he admits, right, there's only a small portion of the monitors that's even dedicated to execution. He even admits 3 of these monitors are just showing the same thing. There's nobody working the supposed trade desk. There's a hypercar over here in the middle of the floor. It's like, are you serious? Right? Nothing to do with real, actual trading. So that's, first of all, that's what you get. Right? So anyways, this is a look over our shoulder. Now, we have many trading programs. Some of them we can't share because they're under NDAs and non-competes and non-circumvention clauses, various operating agreements. But there's so many that it's like, let's pick 3 that are longer term. So this is the real point before I got off into that Dan side tangent, that you can't really fake because we're going to make them multi-day trades, right? None of this, oh no, trust me, I shorted the E-mini at the open. Yeah, trust me, bro. Right? Oh, see, it was the setup that we've talked about in the past, and there it was. So no, as anybody that's known me for years knows, I've been trading for nearly 30 years, worked on desks. I'm the senior partner in my own equities only private prop firm. So yeah, I've been doing this a while. Right? So we just pick 3 programs that are multi-day, and that way you can't fake it. And we talk about the decisions we make and why we make them, all for $15 a month, right? We just figure we'll make it up in volume. Now, coming back here, what do we discuss? Well, if you go to the articles, GTC Traders, you're going to find a GTC sample portfolio post somewhere, and everyone has a link back to the original GTC sample portfolio. So we began it with just $50,000, I think, just 50 grand, and we split it up into 3 different trading books. So 3 of those different programs. So the rules for that particular, for the GTC sample portfolio are all here, and then it links to each post so you could follow them. But we eventually just moved it over to our premium service. So that is primarily what we talk about. So let's just talk about the setup of the portfolio itself. If you have just subscribed, we're going to come over here, and I call this my trusty like whiteboard. I guess this would be a blackboard. So regardless, we have the GTC sample portfolio, right? According to those rules that's in that original post up there. Make sure we got this right. Let's consider it 3 different trading programs. Okay. And that comprises, actually, we should do it this way. That comprises the whole portfolio. So in this first box, it's something where the mandate, and we talk a lot about mandates, the trading program is not about like massive growth, massive returns. It's had 21% years. That's true. It's had really good years. But it's about providing an income. We talk about that in the How to Begin series. What's your objective? Providing a monthly income from, there's ways to do it from shorter term trading, but that's like high-end graduate level stuff. Okay. There's ways to set up a simple income account that literally anybody could do. You almost need no experience with trading whatsoever. And I almost think people should begin there. We call it our equity fixed income hybrid core. So let's talk about that a little bit. Again, the whole purpose of the thing is to provide an income. There's this very specific way we do that with trading this particular program. We call it a hybrid because it incorporates different quantitative aspects of getting different assets that are going to pay you an income. So it's sort of a hybrid between some different concepts that you'll see. It's very much based in equities. Everything at GTC Traders is based in equities. There are no like futures derivatives or anything like that. And it's about building an income. We started it, right? So if the whole thing began with $50,000 of the entire portfolio for the equity income fixed income hybrid core, some people call it dividend investing. It's very much a retail term. This would be considered setting out something up for fixed income. And most people, when they do that, they've got like $900,000 to, $2.5 million, and I want something, set up for fixed income to just pay me an income. That's sort of the thought process. And I've always told ones for years and years and years, well, great, wonderful. What if you don't have $2.5 million? I've literally heard somebody at my jiu-jitsu gym say, well, I ain't got $1 million to throw into fixed income. And it's like, I've shown people how to get started building something that will eventually get there with as little as $500. I one time showed how to do it starting off with $0, right? We talk about that every week, like every month, I should say, like what you need to be doing, what you need to be thinking about. So you can eventually get it there, but anybody can start. So, but that's generally the thought process behind the mandate. Now, the principles apply no matter how much money you have to get started. If you have $0, then start with $0, as long as you have your other finances in order, very obviously. That caveat needs to be there. But if you have your other finances in order, debt paid down, plenty of savings, you can start with $0 and set up a weekly capital deposit. You have to. There's no other way around this, right? It's like anybody promising you this get rich garbage, it's just that. This one we began with $19,000. I've shown starting off with $0. I've shown starting off with $500 and then some regular capital deposits. Capital deposits are whatever you can afford to put in the capital deposits. I've seen people literally putting in as little as $3 a week. This does $35 a week, but it's not into, just so that we're aware. Let me just specify that, right? If there's 3 weeks in a month when we're doing the GTC sample portfolio, 36 might be a little too big. Let's go for 24, right? There's $35 a week into this one, $35 into this program, $35 into this program. right? And if obviously we have 4-week months, so what do we do in 4-week months? Well, that's pretty obvious. You start back from the beginning, right? And you start back and you give this one $35 again. So when we count the performance, we do not count the capital additions. I've seen some FURUs doing that sort of bull crap too. It's like, look, we're up 200%. And when you really pull it apart, it's like, you're not up 200%. Dude, like, you had $50 and you added however much, right? It's like you added 150. That's not a 200% gain. You just added the money, right? So obviously we don't count that for capital additions, but it's $35 every week into each program. 35 here, 35 here, 35 here. 4-week month, you start back here, right? So we just want to say that it's got the benefit of capital additions. We don't count that towards performance. But if you're starting off and you ain't got $1 million, there's no two ways around it. That's what you got to do. Set up the automatic deposit for whatever you can afford. If it's $3, if it's $5, I used to start it off with $0 and $25 a week when I would demonstrate this in the past. $500 and $25 a week. Whatever you don't notice, right, is basically people are like, how much should I contribute? And it's like, well, that's your decision to make because I'm not you. I'm just showing a look over our shoulder as to how we would run this sample portfolio. We had to pick a number, so we picked $35 a week. And there's a whole quantitative program, and it's for building something with the stability of yield for building an account for regular income. And there's a lot to it. I haven't even gotten to all of it with premium members. After this entry, I'm going to put out a text entry for them on just one of the pieces that I consider an absolute must-have for this. Some people call it, again, dividend investing. That's a very retail term. It would be considered building up a fixed income account. And that's its mandate. That's its purpose. Every decision that goes into it has to do with that. And it's not just income, because people are like, well, I'll just buy this thing that's yielding, 23%. And to that I say, good luck with all of that, because you have no stability of the yield whatsoever, and you're just addicted to yield like some little crack junkie, and you think higher yield numbers equals, getting an income, and it doesn't. It just doesn't. I'm sorry, but it doesn't. So you can get yield on cost up. See, now you get me started on this topic right here. I can go on for hours and hours and hours. So we'll just move on. We're describing the portfolio. Second program we run is a long-short valuation investing account. Very old school here, right? If you don't know about valuation investing, we're going to have that in our course. We're only doing one course. We're not doing it as I did in the past, where we have a short-term trading course and we have a long-short valuation investing course. We're still building the course at the moment, sort of behind-the-scenes production, but it's going to have everything in it. Okay, we're going to go over all these concepts and more. But the second one is a long-short valuation investing. Now, it does have our own particular twists. We like to think that our approach to valuation investing is unique, and we like it. So, but it is not just long only. It's long and it is short. Now, we've only been, because of our macroeconomic thoughts, which if you do sign up, that very first pinned article right here, read the report, quantitative, discretionary, systematic, discretionary, and qualitative data. We first go over that. But then this will link to like 5 other articles. It links to another article, which links to another article, which links to another article. And as of January the 10th, 2025, it describes our sort of macroeconomic view of the last, I would say, maybe a year and a half, and why we are approaching our long-short valuation investing book the way we are. We're only interested in short positions, quite frankly. We believe, this is just our thoughts, not yours, it's just a look over our shoulder. If we want to talk about value, there's always something to do, but if we want to talk about value, the market is ridiculously overvalued at the moment. People can come at me with, oh yeah, well, the economy and it's on a tear. Well, guess what? It was in 2007 too. Everything's great until it's not. So we are very much in the view that the market is ridiculously overvalued. So quite frankly, we're only interested in short positions. But we also believe that you shouldn't just be an idiot and just go in short wherever you see a short. You have to think about things. That's why we have sort of a quantitative processes that we embed inside your normal discretion or systematic discretionary long-short valuation book. And we think we've been doing quite well. If you come back over here to GTC Traders and look at the portfolio results that we do continually keep up on the free site, you can take a look at the grid there and you can see the results. Quite frankly, again, we have had, I won't call it a bearish view. We believe we've been in the beginning or the start of a stock market bubble starting in November of 2023. We outline in those series of entries why we believe that is and what sort of the nuance that we would give it that we think others have missed. And so if you think you're in a bubble, we think the dumbest thing that you could possibly do is just go in and short the market. Short the market, short the market. We're in a bubble, short the market. No. We are only interested, and I could tell you absolutely, we're only interested in shorts against the indices based on our thoughts on value and macro at the moment. But we also realize, like, don't be stupid about it. Right? Like, I think it's really one of the dumbest things you can do in a bubble. I was trading in 1998 and 1990, forget that, even earlier than that, right? And just watching in 1996 thinking, no, that stock market's too high. No, 1997, no, that stock market's too high, right? I remember guys getting run over. One of the dumbest things you can do is say, well, just short the market, just short the market. So we're not going to be stupid about it, regardless of our thoughts on value. We're taking much more of sort of Buffett's view during like 1997, 1998, 99, 2000. It's like, we don't know how long this can go on, so let's be smart about it. So we've instituted what's called, or what we refer to as, it's just our name for it, right, is a neutral carry short position, or a program, I should say, that we run. And you can see the larger months there is where we sniffed out opportunity to say, hey, is the market falling apart? Let's sniff out a short opportunity. And, we made a few basis points, not as much as we've liked, and it obviously hasn't fallen apart yet, but I think that's the way to do it, right? So it's not a bang-up year. We've had 20% years. We've had 30% years. They're fun. They're great. But print positive basis points even when you think the market is ridiculously overvalued on a valuation basis. You can still print positive basis points, especially if you're an individual retail trader. It never ceases to amaze me and business partners. Like, guys will, think they don't understand size. Like, if you've ever dealt with an account at size, you understand, listen, Buffett can't put on and take off a position in an afternoon. It might take him 3 months. So I'm sorry, but if you're under $2 billion, heck, even if you're under $100 million, you've got such an advantage in speed, in absolute speed, right? What a $20 million account could do is just so much faster than just light years faster than, what the big boys can do. So we've instituted this neutral carry short position. We're constantly sniffing out what we think could be an opportunity to get short when we see it develop. As of the date of this recording, we have a short position on right now. So it's working out. December was a positive month. This month is a positive month. It won't continue forever, but we'll take it while we are in this. That's how I'd say view that grid, is just remember the environment you're in. So at the moment, again, with this one, we began with $19,000, classic long short value with our spin. At the moment, we're running 100%. Nobody has to run it at 100%, but it's just to look over our shoulder as to a neutral carry short position. Okay, so yeah, finally we have the short-term trading book. We began with $10,000, multitude of short-term trading approaches. We'll talk through any of them with any questions. It's like, hey, Dan, why would you take that? Hey, Dan, what are you doing here? What do you guys think about this? We'll talk our way through it. Trading has not been that great lately. It really hasn't. I mean, we've been positive for the last 12 months or 13 months. I think last year we did, God, what did we do? Almost 8%. Not bang up. That's reality, right? Have I had 35% years, 90% years. Yeah. If you think you're going to have that every single year, you're out of your stinking mind. It's just not going to happen, right? When we first got started with this, it was a little tricky getting it started, right? But it always is. My partner has said this in the past, and I've really seen the truth of it. I've got a business partner, I should say, that has said this. He says, every time you start a new account, it always runs into hiccups. It's like a rule of the freaking universe or something. It's like every month has to be a red month. I don't know why. You could have the best program in the world, and for some reason when you started off it. But I mean, the last 13 months, we've been doing well with it. Nothing bang up, nothing huge. I think 8 or 9% in the last 13, 14 months if you look at it. But, we're just cruising along. And we're getting it started because all trading it's all a marathon. It's not about we have 50% months, bro. Every month, bro. And then you pull it apart and it's ridiculous. Either they're doing something like the risk is absolutely through the roof. They're counting the 50% on one single trade or on a return on MTE instead of total capital. There's all sorts of little tricks the FURUs do to fool you. So nothing like that, right? And we show reality. It's multi-day, so it's hard to fake. Right now, I think the only trade we have on as of January the 10th is a very small short against the indices. So, and we keep track of it all by a ledger. So there's a ledger over here, right? Very, very simple. You can see I just enter it. It takes 10 seconds to do, so it doesn't take a lot of time of my day to do anything else. There is a daily note. Most firms, we're not special by any means, have a daily note just so it's not really trades. It's more, we have a whole video entry on it as well. You new folks, when you come in, just go to that link. What's the thought process behind reviewing your positions and daily note? We have a whole entry there. So there's a daily note. There's a weekly position review where we just sort of review the positions where we're at. We keep track of it in that ledger that you saw. There's a grid. There's a spreadsheet, I should say, where we keep track of all the grids. You can see all the math of how we compute everything. I'm telling you right now, we are not spreadsheet people. I can do spreadsheets. I am by no means the world's spreadsheet guy, by any means. I've mentored people in the past, and they've looked over our shoulder and was like, oh, why wouldn't you enter that in a database when you could do this formula that's that much easier and this much? Because I'm a trader. I'm sorry, but I'm not. This is the S&P 500 index grid. I put it on every sheet we've got. I'm not a spreadsheet guy. So sorry, just each month. This is basically how professionals keep track of their book, and this is just a sample of the S&P 500 index with year-to-dates, worst drawdowns, month-over-month volatility for that year. We keep track of annualized returns, average monthly return, maximum drawdown. This is sort of a Kalmar look. So what is your maximum drawdown over the annualized return? Or like we said, like a Kalmar, it's like 6 times if you go to the S&P route. Standard deviations on a monthly basis. We get the Sharpe ratios, the Sortino ratios. What we're using is the risk-free rate. You can use 3 things. You could use the 52-week bills. You could use 3-month bills. You could use an amalgam of what the risk-free rate did that year. Here's how the Sharpe ratios are considered. There's how you measure your downside deviation if you want a Sortino ratio. All that sort of stuff is in here. Not claiming to be the best spreadsheet guy, because I'm not, right? I've mentored people who are better at it than I am. It's just the way we do it, because we're not spreadsheet folks. We're traders. There's a community chat. So if you want to come in, ask questions live, there's that. And yeah, we just move it forward every single day. We try to do videos when we can. We're hoping that there's going to be more of those in the future, only for premium members. I'm about to put up another entry right now that talks about one of our favorite income pieces and gets a little bit into the construction of that equity fixed income hybrid core, right? Gets into a little bit of the concepts and pieces of that. And then we move it forward every day. I'm going to tell you right now, it's honest. So if there's nothing to do, there's nothing to do. And so people are like, this isn't exciting. And it's like, well, if you're looking for exciting, you know what? You may want to look elsewhere. Anybody that's followed me for years knows there are times where you want to be putting on tons of trades, and there are times where you want to step back from the table and just watch. At the moment, like right now, we have a short on in the market. We have our neutral carry position going. We're hedged over on our equity fixed income. And as far as short-term trading, there's a very, very, very small short on against the indices on January the 10th. And that's it. We've had it for a few days. So, but when there's a lot to do, there's a lot to do. And it's just to look over our shoulder. Okay? You're just looking over our shoulder. The equity fixed income hybrid core, when you learn how to build your own income account for the things that you want to do, however you want to do it, I will say this one is, I think, up to, we just only started it with $19,000, and it's already up to, I think, on average, $19 a month. So that covers the cost right there. And actually, I think it's a little bit more. I think we've got Chicago Mercantile Exchange, CME, is one of our income pieces for a very, very, very specific reason. And I think they just announced a special dividend. So that dividend alone, the special dividends alone, man, we had one last year in Costco. That was pretty awesome. And one final point as we conclude here. If you will notice when you scroll down, there are, I should say, course materials coming soon. Okay, so why am I bringing that up for you as a new subscriber to read the report? Well, the system keeps track of everyone and how long they have been a subscriber of Read the Report. So what we thought we would do is, for those subscribers who have been with us for a while, that time is going to count on a pro rata basis towards the coming course materials. Does that make sense? In other words, let's say I don't know what the final price point is, so don't hold me to this, but we haven't come up with a final price point yet. But it may be $2,000, maybe $2,500, who knows. But let's say it's $2,000, right? And there's 10 videos or something. Well, we take a look and it's like, well, this person has been a subscriber for so long, so they get 2 videos, right? So on a pro rata basis, for how long someone has been a subscriber to Read the Report, they're not going to have to pay extra. They'll get the videos that are coming, and we've started the whole outlay for the course and everything. I chose that picture, by the way, very intentionally. Do you see this? This is an actual trade desk. Somebody tell me, look at this, and I'm giving some hints right here, how you can tell that's an actual trade desk. But anyways, yeah, we'll do it on a pro rata basis, right? And we're already coming up with the course materials for, or laying out, I should say, how we're going to arrange everything in the course. And then how long someone's been a subscriber of Read the Report, that will apply on a pro rata basis. And they may get 2 videos, they may get 3 videos if they've been a longer subscriber. Heck, you could get the whole course on sort of like a layaway deal just by being a subscriber to Read the Report. But anyways, that has been what it's been. This is what you're going to see as a look over our shoulder as to what we're doing. That's all we can do. And it has been what it's been. It's simply been our thoughts, not yours, for whatever the heck day it is. As always, stay safe, trade well, and remember that love doesn't cost a dime.